Welcome back to the Wall Street Podcast. Today we're digging into a fresh analysis from Goldman Sachs research on Li Auto Inc. It's dated September 29, 2025.
That's right. And this deep dive focuses squarely on the launch of Li's second battery electric vehicle, the i6.
And importantly, why GS is sticking with its buy rating despite, well, everything happening in the market.
Exactly. The report really highlights the expected incremental volume from this i6 launch. And maybe more critically, how it's accelerating the BEV contribution to Li Auto's total sales mix. It's quite a shift.
Okay, let's get right into those launch metrics because they seem pretty significant.
They are. The i6 priced starting around RMB 250K.
249.8K.
Right. It pulled in 10,000 confirmed orders in the first 5 minutes.
5 minutes, and then 20,000 confirmed orders within just 4 hours of going live on September 26.
4 hours. That speed is really the core of the financial outlook here. GS expects this momentum to drive, real volume growth starting this quarter, Q4.
And that translates into projections for BEVs specifically.
They're forecasting BEVs, including the i6 now, will make up 18% of LI's total sales volume for 2025.
18%. That's up from just 2% estimated for 2024. A huge jump.
It really is, and that confidence feeds directly into the valuation.
The target price is holding firm.
Yes, the 12-month DCF-based target is unchanged. US $30.09 for the ADR, HK $120 for the H share.
Okay, so connecting that back to the launch speed, that 20,000 orders in 4 hours, how does that stack up against Li Auto's previous launches? Is it truly exceptional?
Oh, absolutely. It gives you a sense of the demand strength. Consider this. Models like the L8 or L9, which were successful,
All right.
they needed maybe 72 to 96 hours, so 3 or 4 days just to get over 3,000 orders.
Okay.
Even the previous BEV, the Mega, took 72 hours for about 10,000 orders.
So the i6 is just dramatically faster.
Exactly. It suggests they've really hit a nerve in that mid-size RMB 200, 300K BEV segment. Strong market fit.
Which brings us back to that sustained buy rating. What's the core rationale underpinning it beyond just this launch momentum?
Well, Goldman views Li as a leading pure NEV player, first off. They expect them to capture about 5% market share in China this year.
And the drivers for that share gain?
Key factors are their strengthening focus on AI, which we can touch on, superior product competitiveness, an improved margin trend, partly through BEMM cost reduction. That's bill of materials.
Reducing the cost of the actual parts.
Precisely, better margins. Plus, capable R&D and production capacity to support future growth. It's a combination of factors.
Makes sense. But no analysis is complete without looking at the risks. What could derail this $30.09 price target? What should you be watching?
GS points to 3 main things. First, just broader industry demand being weaker than expected, macro factors.
Okay.
Second, and this is maybe key, intensifying competition, especially with other BEV models launching thick and fast in the same price bracket.
The i6 is entering a crowded field.
Very crowded.
Yeah.
And third, potential pressure on their working capital and cash flow. Aggressive growth costs money, right? So managing that is crucial.
Understood. Now, let's shift focus slightly. Thinking about the general public, the actual car buyers.
Yeah.
What does the i6 bring to the table, especially in that competitive mid-range SUV space?
It's interesting because the i6 incorporates some pretty cutting-edge tech, specifically this VLA large model, vision language action. Think of it as a much smarter AI assistant. It's designed to handle complex multi-step tasks based on natural language and visual input.
So more than just voice commands.
Oh, definitely. It can potentially understand things like, find a highly rated coffee shop on my route home that has parking and isn't too busy right now. It links vision, language understanding, and actions.
Which could really change the game for NDS and just general in-car assistance.
Potentially, yes. It might set a new standard for personalization and capability in this RMB 200, 300K segment. This whole discussion really brings up a crucial question for Li Auto's future strategy.
Go on.
Given how quickly this gap between their BEV volumes and their traditional EREV volumes seems to be closing, how is the market ultimately going to react? How will it value a company expanding aggressively into BEVs while still relying on its core EREV business? It's a strategic balancing act.
A fundamental question indeed. Something for all of us watching the space to consider. Thank you for walking us through that.
Yeah.
Thank you for joining us for this deep dive.